We're going to do a brief video on UPS stock price today. We've got a daily chart here in front of us with a green 5-day moving average, a red 20-day moving average, and a blue 200-day moving average. If we take a look at this stock, we can see it went to a bull market back in June of 2020 and remained in a bull market all the way until about April of this year, 2022. You can see that we had some gaps here in this stock, and it got too far away from the 200-day moving average, as we've discussed before. Goes sideways, runs into the 200-day moving average, and makes its almost parabolic rally again. Does the same thing, sideways down back into the 200, and rallies again. This time it made its new highs here at the end of January 2022. Went sideways a little bit and broke through into a bear market at approximately the 6th of April. Now, a bear market is defined for our purposes anything below a 200-day moving average, so we can see it went down into the month of May, and around the 19th put in a bottom at about 165. It then made a bear market rally. It respected the 20-day moving average all the way down, and after it cleared up this sideways movement, which was accumulation and some distribution as well, the stock made a stab at getting back out of the bear market into a bull. It did a pretty good job of it. It respected the 20-day once it cleared up, and closed significantly for at least a couple weeks there, almost 3 weeks, above the 200-day moving average. But the economy's starting to slow down a little bit. I don't want to get into the fundamentals, but apparently that's what's going on, and it's crushing their orders. So this stock, you can see, just could not get up and stay above the 200 with a rising 5 and a rising 20. The minute you saw this 5 start to roll over, and especially when the 20 went flat, that's very bad news for a stock that just broke over a 200-day moving average. You'll notice if you go back here, you had sharp turns in the 20-day as this stock began to escape and move away from the 200-day moving average. We did not get that here. We got a turnover and subsequently a tremendous sell-off today. This stock today is down, let's see here, $8 on $176 stock, down almost 5%. $8 down on 8 million shares. Normal shares are over 2.5 million shares a day. So there's a lot of movement in this stock. There's a lot of movement in FedEx as well, which I just did a video on a few minutes ago. You can see it's also gapping down from yesterday from about 184, and the gap distance is about $6. So never a good sign, especially in a bear market. So what do I think for the future of this stock? Let's take a look. If we see back here in May, we established a bottom for this cycle of 165, so certainly that's our first downside target. We're today at 173, so we're only $8 away from that. No big deal. Could easily go down there and probably will test that, but I don't think it's going to test it today or Monday. If it tests it, it'll probably test it by early mid next week, the 23rd roughly. We may see a test of that low if we get it. I expect this gap will be filled. Almost all gaps are filled. You can see this gap here is filled, this gap here is filled, this gap here is filled. Stocks and other securities fill their gaps usually. So I expect probably this stock to sell down to about 169-ish sometime next week, and then I expect a rally that may not fill this whole gap next week, but I expect it to come up eventually and fill this gap, or almost fill this gap, probably in the low 180s. So my best guess right now, 169-ish as a target, and then rally back up to fill some or all of this gap within the, by the next 2 weeks, by the end of September. Keep in mind, we're in a bear market. This is a very severe sell-off. This is a sell-off that could turn into a rout. So again, I don't ever like to think about catching a falling knife. So everything I'm talking about is for entertainment purposes only, and again, all my own opinion. You have to be very careful picking bottoms, and I'm not recommending that. But I do see downside reasonable 168, 169, upside reasonable 180s, low 180s, high 170s in the next couple weeks. It's going to get into a trading range, in my opinion, here soon, but it's got to do what it's got to do here in the next few days and establish some kind of bottom. What do we need to get this stock in a deep sell-off? We need to get some more activity. We need to get some more bars going in here, maybe 2 or 3 more bars, and push a test down to 165 and see if 165 holds. To get it to rally, we definitely need to get some filling down in here in the 170 range. We need to get some support and some filling. It's got to go across here probably for a week or more, and then we have to work our way back up, fill this gap, and give this 5 and the 20 time to get underneath the stock and push it up for another test of the 200. That's why I say if we don't get a complete collapse, which we might get, I suspect lows of about 169-ish or so, and highs, high 170s or early 80s, low 180s. And again, all entertainment purposes only, all my opinion. I checked earlier, we do not cover this stock, probably because the daily volume is normally only about 2 million shares, which is not a lot, and that's probably why we don't cover FedEx either. So we don't cover this stock for our algorithmically generated trades, but we do put out 190 stock algorithmically generated prices every morning before 7 a.m. These are out today for the 16th, and you can see we have them for Apple and Tesla and all the other big stocks. These are high volume stocks, so we have them for the most active stocks. Today, the package stocks, the shipping stocks are extremely active, but they're normally not. Again, these are algorithmically generated. We have 1, 5, and 20-day holding periods. These are trading day holding periods. If you were to buy, assuming your own analysis said it's a good idea, buy in a 1-day column, close out worst case the next trading day just before it closes at a loss, or take your profits as soon as you get them. Same thing in the 5 and the 20. If you buy in the 20 column, buy today, close out at the end of the next 20 trading days at a loss, or take your profits as soon as you get them. And that's the way these work. You can get them absolutely free, no credit card required, at rbamresearch.com. There's a link in the description below. They come out before 7 a.m. Monday through Friday for 190 stocks, the major forex pairs, BTC crypto, and the most liquid futures contracts. Again, absolutely free, no credit card required. If you like technical analysis and you like these moving averages, please let us know in the comments section. If you don't like them, please let us know as well and tell us why you don't like them. If you like this video, click the like button, please, and also subscribe if you want to see more. We're putting out quite a few videos every week. Everything you've seen or heard on here is for entertainment purposes only. It's all my opinion. It's all for entertainment only, and you definitely have to do your own analysis and trade at your own risk.